Hey everybody, this is Greg Lewis. Whoa, got a little reverb going on there. Hey, thanks so much for joining us today for this week's market recap. Our guest today on a market recap is Jeff Tompkins. You may have actually seen it 2 days ago. Was it 2 days ago or yesterday? Time doesn't mean anything anymore when you're broadcasting from your home basement all the time. You forget to keep track of the days. I believe it was 2 days ago. Jeff Tompkins gave us a great presentation on how to define market shares, to see market changes days in advance. Today he'll be talking about, as we do on Fridays, the markets and what's going on this week and how you might help prepare for the next week and the time going forward. Our host today will be Jeff Gibby, our very own Jeff Gibby. I see Jeff is on. I see Jeff Gibby is on. I don't see Jeff Tompkins. So hopefully he'll get there and we'll actually be able to start in 3 minutes and 18 seconds, like the clock says. Let's see, what else was I going to tell you? Oh, so today is only being broadcast on YouTube. On Fridays, every Friday at 2:30, if you come right here, you'll be able to join us for the market recap. And we have a different guest every week. Sometimes it's guests from the Orient and Asia. Oh, Orient, that's not a PC term. From Asia and from Europe and the US and North America. If you want to see a recording, it's actually being recorded right now. All you have to do is come back to where you are now and you'll see this being recorded. Now I see some people are already logging in. Go ahead and make sure you say hello and let us know where you're from. We got about 2 more minutes.
Hey Jeff, how are you?
Another thing I wanted to mention. Oh, I do see Jeff Tompkins is
looks like
is here, so it looks like we're going to be ready to roll in a few minutes. Except I just remembered I got something on the wrong. Okay. I think you guys might have been hearing the discussion between Jeff and Jeff. All right, so anyway, one last thing I wanted to let you know about is the Traders Summit tomorrow. That's going to be going from 8 a.m. Utah to, let's see, I guess it'd be better to say 10 a.m. Eastern Time to 4 p.m. Eastern Time. It will have 8 great presenters, including Jeff Gibby, the likes of Steve Bigelow. Today's Jeff Tompkins will be there, Robin Dane, Eric Wilkinson. I'm forgetting a few, I apologize. But so we got about a minute to go. I'll go ahead and let you just listen to some jazzy music while I check with our presenters and make sure they're ready to roll.
Hey everybody, Jeff Gibby here. I hope you're doing well. We're going to go ahead and do a market recap. So welcome to the event today. Thanks for joining us. And today we do have a very special guest. Let's kick it off with a legal disclaimer. So I'm going to go ahead and start there. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or the information provided in connection with the company. So there you go. Our guest today for Market Recap is Jeff Tompkins. Jeff has been a partner of Metastock for about a couple years. We've actually had a product that we spent quite a bit of time designing and kind of getting ready. It's been extremely popular. It had a pretty good signal that kind of bought in earlier on Dow this week and stopped out on a pretty good gain this week. So it's been a very, very popular little add-on. Jeff does a really, really good job of training people how to trade, and that's kind of where his background is. And one of the things that I'm going to talk about a little bit as I introduce Jeff is one of the people that I remember doing kind of like a market recap early January or February, and he said something that was a little bit alarming to me, that said, I think we're kind of getting towards the end of a bull market or something to that effect. And so that's really, really something I was like, are you kidding? We just made an all-time high earlier this week. So I'm really interested to see what his take on the market is this week, kind of what he's thinking, what his expectations are, and what he's looking at. So let's go ahead and bring him on here. Jeff, how are you today?
Hey, good. I'm well. How are you?
Good. Did I get that story and did I remember it pretty well?
I mean, I think you remembered it probably better than I would. I know it was right around that time, right before the market crash, that we held our last market recap together. So I think you're probably pretty close, because I do remember talking about the levels and showing some concern around those. Of course, at that point in time, none of us really knew the scope of this current pandemic. So it was pretty early in the year. But yeah, we'll definitely be touching on that and talking about kind of what may lie ahead and what has happened, of course, since the sell-off in February and March. So hopefully you can see my screen now at this point.
We can. We're looking at the S&P 500.
Okay.
I'm going to narrate it a little bit, although everybody's paying attention. Had a little bit of a plunge. We're retraced right now on I don't know about the S&P number, but we've retraced from the low that we hit in the Dow about 61% today. And obviously we had a pretty bullish week. We were gapping up every day up until today. What are you thinking about the current market and where we're at?
Yeah, and in fact, when I signed on, you had your screen up. I noticed you had it looked like some Fibonacci retracements plotted up there, which are a great thing to look at in a steep sell-off like this, because it can help us find areas of resistance. And I do use Fibonacci from time to time, but we'll kind of look at some of the areas of support and resistance in the market. I'll kind of show you what I'm looking at. We'll even look at some past case studies of steep market sell-offs and how the market tends to react after those. And we'll talk a little bit about the environment outside of just trading in the market, in terms of what may happen in the remainder of the year with COVID-19 and kind of where things are, because certainly a lot of the things that we're going to end up seeing down the road in the latter part of 2020 are going to be lagging components of things that are happening right now, or even earlier in the year, in terms of high unemployment and joblessness and damage that has been done to particularly small business and medium-sized business in the United States, as well as across the world. And of course, now we're really back in the thick of things with China in terms of the trade war. So there's a lot of instability that we need to be considering when we look at the market. But we can start by kind of looking at what happens in these types of events. So obviously this was a black swan. Nobody could have predicted a virus like COVID-19 coming along and having the significant impact that it's had on the market. But what we do know, using a lot of the tools and indicators that I use in my own trading, that we have programmed into the trade trend add-on for Metastock, and a lot of the decisions that I make in my hedge fund, Altos Capital, is we know, like Jeff and I talked about at our last market recap session earlier in the year, is that when markets get to a certain point of being overbought or momentum is beginning to slow and weaken, when an event, any sort of a black swan or major geopolitical event does come, as it always inevitably does, it's really more an issue of the market being vulnerable to a steep sell-off. And so we'll talk a little bit about that. Another thing too, that, I mean, this is going back to 2018. If our viewers today, if any of you guys were trading back in 2018, you'll remember that there were 4 major corrections that year. In fact, I'll just kind of zoom out on my chart here. And so we saw a lot of these major dips in 2018. In fact, the last one in December nearly put us in bear market territory. But this was a choppy year, and it's not uncommon to see these types of corrections of this magnitude and this quantity that we saw in 2018 as a bull market is kind of coming to its end. We still obviously got a continuation of the bull market last year in 2019, but sometimes these are forewarning even a couple of years in advance prior to the end of a major bull market like we've been in for about a decade. So that was kind of my first warning. And so anytime we're at an all-time high in the market, like we were right before the crash in February and March, I'm looking for momentum shifts. So any sort of sell signal that I would get from our trade trend, or from our Metastock add-on trade trend, that gives me warning that there is a potential sell-off looming if something like a pandemic or a major geopolitical event comes along, which of course it did. So after we topped out on February 20th on the S&P, literally over the next 2 to 3 days, we started to tank and sold off, around, I think it was around 35% peak to trough. And that's unnerving. Obviously, it frightens a lot of traders and investors, and it's hard to know how to react and when is it going to end, and when is the market going to rebound? How much is it going to rebound by? And nobody has those answers exactly. But what we can do is we can identify, first of all, we can look and see how markets react in the past to things, even though every event has its nuances and differences. We can look back at similar events in the past to see how the market reacts to those, and that's helpful. And we can also look at major areas of support and resistance in the market, which we'll be doing together today, to help find high probability buying and selling points within the market. And we don't have to necessarily pinpoint those exactly to be successful. We just need to have a good idea of where the value lies in the market, whether it's an opportunity to buy or an opportunity to get out, protect our cash, or short the market. And so when the sell-off occurred in February and March, there were many supply points in the market, or demand points, sorry, in the market, where buyers came in previously and drove prices up. And we can see these here in June, August, October of 2019. We obviously blew right through those. So usually when there's a major sell-off around a very significant event that impacts the entire globe, I'm going to look back to a major low over the past 1 or 2 years. And so that point would have been the low back in December of 2018. And that was the sell-off that nearly put us into bear market territory before this major rebound in prices. And I'm going to look at that as a point for buying opportunities. And you'll notice here, if I hover my cursor, in fact, I'll just put a horizontal line there to make it easy to see. I'm obviously not the only one aware of this and watching it, because you'll notice that after the market sell-off, and interestingly, we'll talk about this too, the the half century marks and the century marks on the S&P, interestingly, a lot of these buyers and sellers come in at these levels. And you'll see that the low from December 2018 resides right near the 2350 level. And sure enough, although we did trade below it, that's a great opportunity to set our level on the chart to look to come back into the market to buy on a major sell-off like this. So again, what I do is I look for a major low in the market, and this is again in the context of a major black swan sell-off like we saw February and March. And I go back and I look over the course of a year or two, ideally 2 years. In this case, that would qualify. And I mark my level, and then I look to see how price reacts around that level. Are we really going to break through it, sustain a breakout and continue to move lower, or are we going to push back through? So we only broke through and actually closed below 2350 on the S&P 2 days, on March 20th and March 23rd. And then on the 24th, and I'll zoom in here so you can see this a little better. On the 24th, we closed back above. So this is the signal to go back, get back into the market. This is a good buying opportunity. It seems that the market's found some support, and sure enough, we've seen the rebound rally. And really, this rebound rally has predominantly been driven by headline news. There really hasn't been, I mean, there have been some silver linings in this pandemic. There's been certainly slowing of transmission, deaths, and things of that nature, but there's been no real resolution. We don't yet have a vaccine. We don't yet have a viable treatment for people who get admitted to hospitals and things like that. So it makes you wonder why are we pushing back up in the market so strongly? It's just largely driven by news, especially when you consider all the damage that's been done to the economy and to jobs. And so that's going to be a lagging indicator that we're going to want to look at moving forward, and we'll get to that in a minute. But for the time being, just looking at this rebound rally, again, largely driven by headline news, speculation, and to some degree reopening of the economy. But because those are all temporary sort of catalysts that would cause a rebound rally, the true underlying damage that's already been done is what we want to look at on a forward-looking basis moving forward. So even if we look back at previous sell-offs, what we often see occur, just to different levels of magnitude, is what's called a V-shaped recovery. And it often happens, and it's really interesting. You can do this on your own time. It's kind of fun to go back and look, but I'll look at a couple examples on our session today at situations where you have these major steep sell-offs that cause a lot of panic selling, followed by a subsequent rebound. And you can almost overlay these. Again, they're of different magnitude, but you can see how similar they look in different situations. So this one was the sell-off in December, so going back a year and a half ago, and you see this V-shaped recovery. And I call it the rubber band effect. It's like pulling a rubber band back until it can't stretch anymore, and then it snaps back when you release it. And that's kind of what's happening here right now. So you see this, how similar this looks, just to a different magnitude. And you can go back and find these all over the place. But that's one of the basically near certainties in the market is when you get a steep sell-off, you get a rebound. It's happened 100% of the time, every sell-off in the market. And you can see these all over the place, again, just to different magnitudes in terms of the steepness of the sell-off. But what I look for, well, there's two things. One thing is I look for that rubber band effect, that snapback to a level near where the market started to sell off, and we're almost there. And then number two is I look at as I mentioned a few minutes ago, the half century marks and the century marks on the S&P. So that would be levels like 3,100. That would be a century mark level. 3,150 is a half century mark level. 3,200. These are major levels that I'm watching for price action, whether it's a rejection of the level or a breakthrough, a sustained breakthrough that level. So we want to be watching right now. The really big level I'm watching is 3250, because that's really where the trend broke. You can see that we're in this nice uptrend. This was the previous demand point that brought in buyers that pushed prices up to all-time highs. And then when COVID-19 started to impact the market in late February, early March, that's the level that broke and changed the trend from up to down and took us from bull market to bear market. And so on a rebound rally like this, what you'll often find is a move off of a resistance level at one of the half century or century marks, and then back down again. So we want to be looking for some sort of a rejection of a level, and this would be the major one, 3250. But I'm also going to mark the other century marks and half century marks here. Okay, so we can see these. And right now, we made it through 3,000. That was a big, very big milestone. The question is now, are we going to break through? Because we have kind of conflicting price action over the last couple of days. We had a reversal day today where we were trading down and then moved back up. Yesterday we had a reversal day, and by reversal day I simply mean we were yesterday trading up and then ended up closing down. Today we're trading down and ended up closing up. So this is a bit of conflicting price action here at a major half century mark, 3050. But what we want to watch for is, will we push above 3050? If so, our next level of resistance is 3100. If we can make it through that, 3150, so on and so forth. If we see any significant rejection of any of these levels on the way up, by significant I mean over the course of 3 to 5 trading days, we're not able to push through, or we see significant closes below the level, then it tells us that the rebound rally may be likely over, and we could see a push back down, and even potentially more on a longer term basis in terms of looking out to the end of 2020, a potential retest of the lows from back in March. So that's really what I'm watching, and how I'm basing my trading decisions is off of these major levels. And this is, certainly a tactic I use in my hedge fund, Altos Capital, and many hedge funds and large institutions are watching these levels very closely, and that's why you often will see price react significantly around these half century marks and century marks on the S&P. So the big question on top of everyone's mind is, are we going to get back up to previous all-time highs? I think it's very unlikely if we look at the fundamental state of the economy as the collateral damage that's occurred from COVID-19. We're still, I think, yet to see a lot of that impact the economy. So there's a lagging component there when we talk about what's actually occurring in the economy versus what's happening in the stock market. And so I think that as we start to see unemployment rates continue to go up, and a lot of the financial damage and fallout occur in the small to medium-sized business world, that's going to really have an impact on markets. And so that would be a catalyst for ending this rebound rally and pushing us back down in the market. And then certainly another catalyst that could keep prices basically on an uptrend would be any sort of resolution to the COVID-19 situation in terms of a vaccine or treatment. But I think with all that being said, we just need to get used to increased volatility in the market until that all plays out. And that's likely going to be through the end of this year and potentially even into 2021 until we can certainly get through the election, reach a point where we have a viable vaccine for COVID-19. So I would expect that we'll continue to see some pretty wild swings in the market throughout the rest of this year. What are your thoughts, Jeff?
Well, one of the, I think that was a pretty good way to break it down. One of the things I kind of wanted to kind of clarify a little bit with you was, so you think, if I can put words in your mouth, I'm going to just shove them in and see if they're rejected. But you think we're more likely to hit test lows than to test highs throughout the remainder of the year?
You know, I'm always hesitant to try to make any sort of prediction there, but what I will say is that if you think about what has caused the market to go back up after hitting lows in March, and what still remains to unfold, again, all the things we've discussed together so far, it seems the more likely direction is to the downside, because we have to think about what's going to keep this trend, this rebound in place. And I think the things that could do that, I think the one thing that will help it is the reopening of the economy. But if you think about all the things that could derail this rebound, I think they outweigh any sort of catalyst that's driving the rebound. So again, if you think of a lot of the damage that's been done, the unemployment rate and things of that nature, a potential resurgence of the virus, which Dr. Fauci and other epidemiologist experts have agreed is almost a certainty. I think that there's just too many things that could lead to another sell-off in the market before we see any sort of shift back into a real bull market.
Okay.
So right now I'm certainly more bearish than bullish, and unfortunately a lot of times these sorts of rebound situations catch traders and investors off guard because they get over exuberant and think that the worst is over, we saw it, it's done. And in this scenario, I'm afraid that may not be the case. So I'm actually surprised that we have sustained this sort of rebound as long as we have, because again, we hit that bottom back at the end of March 23rd. And now that we're well over a month into this rebound, that is significant. It's something to take note of. I would have actually, if I had to make a prediction, guessed that we would have retested lows back in April, but that's not to say that it can't still happen. And even if we don't get back down to the all-time low of this year, I think that, we will likely see some retracement, at least to some degree, of this rebound. What will be to be determined is the significance of that.
What do you make of the Fed's willingness? It seems to just like money, just like throw money at the market. I mean, we've had huge amounts of stimulus get poured into the market. They're even going and buying bonds of companies, and really doing everything they can to, like, I think Jerome Powell said, I'm willing to I can print money digitally. He literally said in a news quote. Do you think that plays anything into the bullishness that we've had with this bounce?
Yeah, no, that's a great question. I think certainly it does. But we need to look at how does it play in and what's really the longer term impact. So to me, those are Band-Aids on a big wound. It can help short term, which is what they're trying to do. So I think really the question is how many times are they willing to do it? They can only inject so much stimulus into the economy. It's not infinite. It is finite, and it comes down to how far are they willing to stretch that to keep things going, because it's a bit of a kick in the can down the road type of scenario where you're really just putting a Band-Aid on a wound and hoping that it heals. But if you don't actually heal the underlying problem, again, it's just really kicking the can down the road and delaying things. And in fact, really what that can do is just set us up for a worse crash down the road, so that when that Band-Aid finally comes off, the bleeding just continues. And so that's what we need to be cognizant of and aware of and prepared for when we're trading the market or investing in the market. And really, this is a trader's market. I mean, these are great conditions for a savvy trader who can, pinpoint these trends in the market. Because if you're savvy, you can identify these levels and determine how the market reacts around them, when it's likely to move in one direction or the other. There's a lot of money to be made here for certain, but it's not an easy endeavor. It's a tricky market to trade, but it does provide a lot of opportunities for the trader and investor.
Absolutely. I have a bit of something different I wanted to try with you today, Jeff, and I hope this goes well. I'm not sure how it's going to go. Before we started, I ran a little bit. Oh no, this will be fun, I think. Maybe we'll see. Before we started, I ran a little quick scan of the S&P 500 on trade trend setups. I wanted to look at a few of them and kind of get your thoughts on whether they look good. I thought this might be informative to people that are maybe using the methods that you kind of teach to kind of help them make these kind of decisions on their own. So does that sound like a good play?
Yeah, I'm game.
Okay. I kind of look at it as, whoa, oops, hold on. Trying to look at my, okay, so the first that would be interesting to take a look at is, which is, I'm just looking for the signal real quick, or the symbol.
You want to share your screen, or what would be easiest?
Oh, we could, yeah, why don't we do that? That'll actually kind of, let me just make the change real quick here. Change presenter to me. Okay, show my screen. And let me know if you can see Metastock.
I got it.
Okay, perfect, good. Okay, so just to tell everybody what we're doing here. I've run the trade trend long setups. We ran this right before market close. And what this does is it'll go through the S&P 500. It'll list any of the stocks that have a setup. So these aren't stocks that have triggered yet. They would trigger if they go above their high for today. Am I remembering that right?
Yeah, basically the methodology behind trade trend and behind a lot of the trading that I do is momentum based, and I look for basically is a more of a filter to confirm momentum direction. I look for the underlying security that we're looking at to trade through the high of the candle on a buy signal through that high of the candle, or conversely on a sell signal through the low. That's correct.
Okay, so I'm going to open up the first stock, will be Clorox company. So this one had a setup, and I was kind of looking at this a little bit earlier, just as I was kind of getting a little bit ready. We've had some really good setups on Clorox. It is one of the stocks that has benefited from kind of the situation in the market right now. Mm-hmm. Had a little bit of a setup here, a trigger, nice little move. Setup to the short side here, trigger, nice little move. We're getting another setup right here. What are your initial thoughts on this?
So it's definitely in the context of a broader uptrend. So it could be a good trend continuation signal. And as you mentioned, Clorox, stands to benefit from this current pandemic, being in the industry that they're in. One thing I'm noticing so for people that aren't familiar with the trade trend momentum indicator for meta stock, it gives you a warning signal that basically tells you up to 3 candles in advance whether the market is likely to go up or down. And so the green diamond is telling us that the momentum is shifting to the upside following this previous sell signal. And as Jeff's showing you there in the commentary, a buy setup has occurred. But that doesn't mean that we get into the market right there. It simply means that the most likely direction is up, and it will give us a suggested entry price above that candle. So even if we enter a buy stop order, which is the type of order that we would use, or a buy stop limit order to get long Clorox on this buy signal, it may not necessarily trigger. There may not be momentum follow through on it. It would have to actually go up and hit that suggested entry price of 206.75. And if it doesn't do that in the next 3 candles, and it moves lower, then it would result in a null signal. There would be no trade. Now, what I'm noticing just in terms of the price action here is something similar to the previous buy signal. So on the previous buy signal, there at the beginning of May, it looks like it was right on the first day of May, it kind of occurred in the same price pattern that the current one is. We see the buy signal warning right there on that previous swing high in mid-April. And we didn't quite get up there on this current buy signal on the previous swing high that we see there on May 18th or May 17th. But what I would really want to look for is I may be a little more cautious, because this could be the end of an uptrend. And if we look at the price action on today's candle, it's what's referred to as a hanging man. Those can sometimes be bearish reversals. And so these last 3 days may have been simply a retracement of that previous sell signal, and there may be no follow through, or we could get a false break of the high of today's candle and a subsequent move lower, which is what I'd be concerned about and cautious about if I were to trade this signal. So what I may be more apt to look for is a break of that swing high back. It looks like it must have been like May 17th or so. That high, yep, right where Jeff's got his cursor. And certainly, although the trade trend add-on for Metastock does give you entry prices, we can always use some discretion in that as well. It's all formula driven, so it's based on an algorithm. But if I were to trade this personally, I maybe would look for more of a confirmed break through that high where Jeff has drawn the horizontal line there, just for further confirmation of a continuation of this uptrend. But that could be a good breakout trade on this buy signal. But certainly the stock is looking good in terms of upward trending price action, and even considering that, has had some nice successful sell signals within that uptrend as well. Another thing that you can always look at too is going up in time frame to weekly charts or monthly charts to kind of see what the larger trend is. Maybe there's a buy signal on the weekly chart. So yeah, there was a buy signal on the weekly chart here. It was exited this week, but it was on a reversal week. You see there that this week the stock traded lower and then reversed back to the upside, which is bullish. And certainly the stock is in a strong uptrend on the weekly chart as well. So we'd be trading with the predominant broader trend that we see on the weekly chart, which is good. But you see that major that candle with the really long wick on it in March, when things were starting to really get hairy in the market. Again, I would like to see a break of that high there that we hit in March to be really comfortable that Clorox will continue moving up.
Perfect. That was great. I'm going to let you pick the next one. Here's a list. Anything?
I'd be curious to look, if you go back up to look at Amgen, It's really interesting right now how some of these biotechs are responding to the market. I mean, the biotechs, of course, are a riskier play in conditions like this, where you get one little bit of bad news about a vaccine or whatnot, it really affects the whole industry, whether that company is making vaccine or not, or running any trials for a vaccine. But this, I actually, I like this buy signal off the price action of the candle off today. This was definitely a big move
A
up.
strong move. Yeah.
Right, strong move. This, I really like to see that. And what I particularly like about this one is I like the buy signals that come after a fairly strong move down, or conversely, I like the sell signals that occur after a fairly strong move up, because the market loves to trick people and make you think that it's going one way and then it reverses on you and goes the other. And really, that the market doesn't have any ill will towards any of us. That goes without saying. It's more of the market participants who realize that these are good buying opportunities or selling opportunities at certain levels. But I do like the buy signals that come in at lower levels, because that's where you're going to find larger funds and institutions moving in to scoop up shares at a lower price. And certainly off the strong reversal day, like we see here in Amgen today, that looks like a strong signal.
All right. Is there any stocks you want to look at in particular?
I didn't have any plans. I didn't have anything really, lined up. We could look at mRNA is a good one, because they're developing, they're running trials to develop a COVID-19 vaccine. They recently had a pretty good run up, but then a significant sell-off. In fact, there was a nice short signal from Trade Trend on mRNA that made some nice profits there. No current buy signal on this one, but I think this one does have potential moving forward if we get a buy signal. So it looks like this short trade was exited today on a move up in the stock. And so we're seeing this kind of bullish reversal on a lot of these biotechs. So right now it's flat. There's no buy or sell recommendation from Trade Trend, but if there were to be a buy signal that occurs here, it might be an opportunity to jump back into this one. But this one's very, very volatile, as you can see. I mean, it peaked up, I think, around $87 a share just a couple of weeks ago, and it hit a low of like 45 just a few days ago this week. That's a big price swing. So this is one you'd want to be aware of that, and know that that's probably going to be a lot of volatility in this stock till a vaccine hits the market. But just a fun one to watch. I've been keeping an eye on mRNA. Let's see, anything else I've been watching closely? I think right now, if we're getting into, stock picking is always tricky in these types of market conditions. I tell most of our members and students it's better to, probably if you want to be in the market, it's better to go with a diversified, ETF or something that tracks an index. So you're not trying to get into the stock picking game. It can be very tricky in these situations. But I think if that's something that any of our viewers are interested in or looking at, certainly trying to pick stocks that may stand to benefit from situations like we're in, like Clorox, like Jeff, like you pulled up off the bat. I think those are good companies to hone in on, because this is actually probably going to help their business versus harm it, and try to steer clear of companies that are vulnerable to shutdowns. Certainly stay out of the restaurant industry or any sort of industry that if we do see a resurgence and things need to shut down again, you wouldn't want to be in any of those stocks. But in stocks that in companies that remain open and stay in business, retailers like Walmart and places where people need to go no matter what, to get things that they need during these situations are going to be the safest bets, I think, in these types of market conditions.
Perfect. So we do have a bit of a feedback from YouTube. This is great. It's really appreciated. It's one of the comments we have. Faisal Ali says, what do you look at to determine future trends of the market? That's a fairly loaded question, so I'm going to give it straight to you and see how you handle it.
Well, I mean, I look at Trade Trend, which is our software and add-on for Metastock, to rely on that because it does do a really great job at forecasting future trends and momentum in the market. Of course, I'm a bit biased, but I do actually, like I said, use this technique in my hedge fund, Altos Capital, as well as in my own personal trading that I do. I use it to make decisions. Now, of course, there are many strategies we can implement around these types of forward-looking momentum indicators or forecasts in the market, whether it be through different option strategies or equity strategies, using options to protect trades and things of that nature. But what I generally, everything I do is momentum based. So I'm looking for really momentum shifts within trends or momentum reversals off of steep sell-offs like we've seen this year. That's really what I look at, and how I think is really one of the keys to my success trading the markets is being able to identify those. And really, momentum is one of the few methodologies I've found in the markets that can do that. It provides a fairly good degree of predictive nature in terms of identifying where the market is likely to go, whether up or down or sideways. And so what we've done is we've programmed that into an algorithm called Trade Trend as an add-on for Metastock that helps people do that and helps them stay on the right side of the market. And unlike a lot of indicators out there, where generally it gives you a signal and you need to act on it at the moment, I tend to steer clear of those types of indicators because even if you're trading in a longer time frame, like off of a daily chart, they can be tricky, and they can often give you false signals. And so that's why we developed a add-on for Metastock and an algorithm that it attempts to be forward-looking and give an actual warning of up to 3 candles in advance of the most likely momentum direction or trend in the market. But the methodology is momentum based. So I'm not sure if that answered the question or not, but
it's good. Yeah. I'm curious. What general chart time frame are you looking at? Are you normally looking at like a daily or a weekly? Are you looking at a 60-minute? When you open up a chart, generally, what periodicity do you choose?
Yeah, that's a good question. Yeah, when I open up a chart, it goes to the daily chart. I'm not a day trader, and there's nothing wrong with that. I've certainly have day traded in my career, but I've always gravitated back towards a daily chart. I think it really tells the real picture of what's going on. And I get that there are people that don't want exposure to overnight risk, and there are probably a million reasons why somebody may look at smaller time frames, but for me, it's a daily chart to get the real picture of what's going on in the market. Because even if you are trading intraday, I think paying attention to the daily close is crucial. I think that really tells us what's going on in the market, because you can see swings all over the place intraday. And again, that's we saw it today, largely driven by headline news or Trump speaking or even sending out a tweet. And so it's really not any good indicator of what the overall market is doing. It's just purely an indicator of headline news, and basically people playing volatility during the trading day. So that's why I look at a daily chart, but also because not being a day trader, most of my trades are more of a swing trade style, where I'm looking to capture moves and trends and momentum in generally like a 1 to 2 week period.
Okay, actually, that was what I was going to ask. So generally, when you're trading for your hedge fund, are you going to be holding something on average for 7 to 14 days, or shorter than that, or longer than that?
It really depends. In the hedge fund, I try to stay as flexible and adaptable as possible versus trying to set any sort of specific rules up front. I always tell people that I think there are many reasons somebody could fail or not be successful at trading and investing. And I think one of the significant ones is we apply boundaries on ourselves or set rules for ourselves that may be too stringent. And that might be counterintuitive to what you may hear other people say, that you need to have a very specific set of rules and stick to them and follow them. And that's true to a degree as well. But and that should be done actually, really, but in the context of being flexible and adaptable to market conditions, because market conditions obviously can change on a dime, and there's really no way to predict that. So if you can have a arsenal of strategies that allow you to be flexible and adaptable, and go with the flow of the market, that's to me what has led to my success. And I think that whether you're in a trade for a week or 2 weeks or 3 or 4 should be determined by the market and not by the trader. And so that's generally what I do is I let the market tell me, when is it a good time to get in, when's a good time to get out. And I use techniques to help me do that, whether it's, for instance, scaling into a position or scaling out of a position. And so in the fund, we'll have some shorter term trades, and we'll have some longer term trades, just depending on what the market's doing. In the context of a big sell-off, like we saw earlier this year, we had more short-term positions, where I shorted the market to make money on the sell-off, and that was simply because I realized that market sell-offs tend to be dramatic, steep, and short-lived, and so in those types of conditions, I may short the market and only hold it for a very relatively short period of time. And then I also realized that rebounds often can take a lot longer. Price appreciation virtually always takes longer than it does for prices to go down, which happens much more quickly. So then I may hold bullish positions for a longer period than I may bearish positions. So it varies, and it really is set up to match the market.
Do you find that you are more conservative or more aggressive, or about the same when you're trading your own personal funds versus your hedge fund?
That's a really good question. And there's definitely a difference in psychology there, because other people's money is at play versus just my own. I would say that I would like to say I'm equally cautious, but probably the reality is I'm more cautious in my hedge fund than I am in my own personal, because simply when you're pulling people's money,
yeah, I get it. It's not your money.
right. When you're pulling people's money in a fund, everybody that's invested in that is going to be in different life situations, different financial health situations and whatnot. So I have to kind of treat everybody equally, even though they're not. Whereas for myself, for instance, I could withstand I could take more risk and withstand more of a drawdown than probably most people are willing to or able to. But at the same time, I'm a very risk averse trader, so I am still actually quite cautious when I tell people what I do in my own personal trading account. They're often surprised that, with the experience that I have and the success that I've had, why don't you go bigger? And it's just all psychological. It's what you're comfortable with. I do what I need to do to sleep well at night, and I don't want to jeopardize that. So health is more important, right? Always.
Absolutely. Always, especially right now. What would you say, where do you want us to send people to? Why don't you do you want them, if they want to kind of follow what you're doing, where you're speaking, join your mailing list, like where do you want to send them?
Yeah, so if anyone's interested in following our market analysis, or we do hold sessions like this ourselves. We love doing these with Metastock, and we'll continue to do that. But we also do additional free sessions that contain market overviews and analysis and things like that. And we send out announcements to our subscribers. Probably the best place to go would be to our website, which is Altos, ALTOS trading.com, altostrading.com. And you can sign up for our email list there. And we do, again, hold these types of sessions on a regular basis and send out notifications of those.
I'm also going to throw in my own little plug. Tomorrow, we're going to have Jeff Tompkins, as well as 7 other of my best friends, to come in and talk about the market all day long tomorrow. So you can visit us there at traders-summit.com. And Greg is going to put that link in the thing as well. Jeff, always great. I really appreciate all the work you've done with us, the contributions you've done. This add-on is great. I really appreciate you bringing it to the Metastock base. Any final thoughts?
No, likewise. I appreciate you having me here today. I appreciate all the hard work you guys have done on your end to make Trade Trend so successful on your platform. We have many users, members, and students and subscribers of ours that use it on the Metastock platform and absolutely love it. We've heard nothing but positive feedback, not just from the Trade Trend add-on, but also from the Metastock platform. So I just want to thank you guys for all the hard work you do. And I look forward to seeing you tomorrow. It's going to be a great event tomorrow.
Yeah, you're going to get sick of us. That's 3 times this week that we've
I was going to say that. Your 3rd time this week. Yeah.
It'll be a blast. I love the summits. Come tomorrow. We'd love to see you there, and we're going to have all kinds of great experts like Jeff here. Jeff, thank you for coming today. Thanks for everybody that watched. If you're watching us on YouTube, because that's the only option, thank you. We appreciate that. Make sure to like, comment, subscribe. It does help us quite a bit. And until the next one, we'll see you tomorrow.